since there's a chat in the Q&A, you can at any stage ask questions and we will get those asked and answered for you and get you interacting with those questions. So thank you very much for joining. We've also got Ryan Hanley here, who was MD of Token Market, a big crypto firm, who will be helping to quiz Iqbal. So Ryan, Iqbal, thank you so much for joining us, and thank you to everyone for coming. We've got a number of more people joining, but Iqbal, over to you. You promised you'd answer a few big questions for us.
Okay, so firstly, hello. This is strange doing webinars when you can't see or hear people. All I have is a list of names. So hello to everyone out there. I mean, feel free to switch your webcams on. It'd be really nice to see faces. I was discussing with Erica earlier, and she said I should talk for 30 minutes. I said, absolutely not. So I'm not going to talk for 30 minutes. What I would like is if you guys have Q&A, feel free to fire some questions, especially to a person out there called Katie Evans, whose name I've just seen pop up, because she heads PR for Asia for eToro. So I'm wondering why she's not working and she's actually sitting on this webinar. But yeah, it'd be interesting to see what question she comes up with. So where do I start? I think the first question we had listed was, are we wasting our time with crypto? I think that was the first question, Erica.
Yep.
So I think the easy answer is I could play devil's advocate here and saying, yes, it's an absolute waste of time. Get a job somewhere else. You're not going to make any money in crypto. It's completely useless. However, I can't say that because I'm passionate about crypto and blockchain. So much so, I think it's going to be bigger than the internet. I recall my wife asking me, what is all this blockchain and crypto stuff back in 2015, 16? And I said, I don't know how to explain it, but it's going to be bigger than the internet. Why do I think it's going to be bigger than the internet? I think you have to take a step back in time and look at the internet and see the parallels between the internet industry and that of blockchain and crypto. So to just make it sound really simple, the internet was all about communication. That's what it allowed us to do, cross-border communication. It wasn't about e-commerce, it wasn't about social networks, etc. It was all about communication and the ability to send messages really quickly and really cheaply across a network between individuals. What that enabled was e-commerce. What that enabled was the social networks of this world and WhatsApp and everything else that we use today. But the internet was all about communication. So if you compare that to the world of blockchain, blockchain is all about value transfer. Rather than transfer of messages, it's all about the transfer of value. One of the easiest ways to understand the transfer of value is to think about money. That's the most basic method or mode we use in terms of transferring value. Hence, the first use case of the internet was money-related, i.e. Bitcoin. First use case of the blockchain was money-related, i.e. Bitcoin, just as the first use case of the internet was communication-related, i.e. email. So if you start to compare the parallels between the two industries, you see the impact that value transfer could have compared to communication transfer. Money is far more important than I would say communication in this day and age. Maybe 100, 200, or 500 years ago, communication was more important. So the potential, the upside is huge. I think the question is, where are we on this journey? And this kind of leads me to the second question slowly, but why don't we have any use cases? And I think we have an issue in the industry in that people are, I would say, jumping on the bandwagon, the negative bandwagon around crypto and blockchain. And I don't want to go back into a 2017 conversation, but I feel that those conversations are still starting to take a foothold again. So we keep reading that, the crypto is being used illegally, crypto is used for drugs, it's a Ponzi scheme, et cetera, it can't scale. Now, there were similar conversations in 94, 95 about the internet. The dark web didn't just appear overnight. We had Usenet groups where you could share pictures of just about anything and where you could purchase just about anything, even today. Those existed back in 93, 94. The adult industry was very predominant on the internet. So again, we have similar parallels to these industries, but the individuals who are asking the question today lack knowledge. I know that sounds rather harsh, but it's true. The individuals who Sorry, I just had a pop-up of a Trojan horse or something on my laptop. I don't know what that was about. Sorry. The internet had scalability issues. We couldn't send movies over email. We couldn't stream movies in 94, 95. But nobody questioned scalability in 94, 95, because the individuals who understood the problem were the same individuals who were going to solve the problems. They were the techies, they were the geeks, they were the early adopters. Unfortunately, today, we have individuals and journalists asking questions about a technology they have no clue about. All they do is regurgitate what they've read in the press previously. So we keep hearing about tulip mania. But if you really go into the depths of tulip mania, you would understand there was no such thing as tulip mania. There was no systematic failure of an empire or a country because of tulips. And this has been well documented. So we need to remove this concept, or educate, I don't know, whether it's journalists or individuals who are talking about scalability issues or talking about crime or fraud use, etc., and say, there is no evidence for this. Or should I say, all industries go through this transitional phase where technologies are used for nefarious activities. It doesn't make the technology bad. Every technology can be used for good and bad. Even the humble invention of fire can be used for good and bad. So, we shouldn't be blaming technologies. We shouldn't be reading too much into the negative opinions. They're all part of the innovation, I would say, the innovation cycle, the innovation curve. I'm gonna have a quick pause there.
So just to jump in there, Iqbal, just jumping in. So on that kind of pivotal point where people started to feel a little bit more secure with the internet and making transactions. So we all heard these stories around unsafe online shopping, and now obviously Amazon has just gone dambusters. And this happened over a, say, 20-year period. We're now 10 years in to Bitcoin and the Satoshi white paper. What needs to happen for crypto to have that pivotal moment where it becomes less price orientated conversation and more around some realized abilities of crypto?
So I'll answer that in two parts. The first answer I'll give now, and the second answer I'll give at the end. So again, I think we have to look at the multiple use cases that crypto has, and we're still sitting in the space where we believe there's 2,000 cryptocurrencies. So there aren't. There are about 5 or 6 currencies out there, whether it's Bitcoin, I'm going to say Bitcoin Cash, few people will shoot me for this, Litecoin, Monero, etc. So there's about 4 or 5, a handful of actual currencies which can be used for money. Ethereum is not a currency. Ethereum is ultimately, whether we want to talk about decentralized finance or we want to call it a supercomputer, Ethereum's use case is not and never has been designed for money. So I think that's the first point I'd like to make, is there are various verticals. So I guess the vertical that you're referring to in terms of when can we really use this as money, when will become adopted? Personally, I think it's about price point. So let's do the maths on this. There are 21 million Bitcoins eventually will be mined. Most of them aren't being spent. Majority, 5 or 6 million of them which have been mined have been lost in one way, shape or form, sitting on various hard drives. So if we have 21 million of anything, right, it cannot fundamentally be a currency because there's not enough to go around, right? And that's the first thing that we really need to understand. If we have 21 million eggs, we can't use them as a form of money because there's not enough to go around globally. There's not enough to go around in the UK, let alone globally. We would need far more. So then we have to have a look at the layer below in the way Bitcoin was designed. I refer to the Satoshi. So there's 100 million Satoshis in each Bitcoin. Now you have a currency. You suddenly have 21 trillion Satoshis when all of this has been mined. And that's more than enough to go around. But so the day we start using it is dependent on the value of Bitcoin. Why? Today, if we spend a Satoshi, which is, 100 millionth of a Bitcoin, the value is nothing. It's currently what, $9,500 divided by 100 million, which is too small for it to be usable. We still need 1,000, 10,000, 50,000 of them to actually buy anything. When the Satoshi itself starts to be worth half a cent, 10 cents, or a number which we can spend on a day-to-day basis, where we can go to a shop and say 5 Satoshis will buy me this, or 10 Satoshis will buy me this. At that point, we will have something which is usable, right? The day we start buying and selling Satoshis versus buying and selling Bitcoin, which we're doing today, is the day it'll become a currency. So we have to have a lot of movement in the price point of Bitcoin in order for the underlying Satoshi to be worth anything. Another way I look at this is look at it from as a bar of gold. So today, how many people actually know the price of a bar of gold? Very few, right? It's around $400,000. We buy and sell gold in ounces, so a subdivision of the bar of gold. So it's when the subdivision of a Bitcoin becomes useful and valuable, that's when it will become a currency. It's too early today. It's far too early today.
To interject you there, do you think it will be Bitcoin that will be the main cryptocurrency in the future, or will there be some other new starter, be that Libra, be that a central bank backed digital currency, or be that a totally new one?
I would be very surprised if the central banks did not move into the digital realm. They'd be foolish not to. So yes, they will come out with their currency, but from a Bitcoin perspective, I mean, I honestly don't know which currency will work. It entirely depends on a user adoption. Bitcoin has a lot of things going for it. It is completely independent. It is not owned by any company, which means it cannot be shut down, right? Full disclosure, I own Bitcoin, but I own a lot of other, I would call shit coins as well, right? But I own Bitcoin, so full disclosure there. But Bitcoin, if it was owned by somebody, if we knew who Satoshi was, the government could have shut it down today. That was the smartest move ever made with Bitcoin. You don't know where to shut it down. You don't know which company to go after. You don't know which computer to switch off. So if you want independence from a monetary system, then Bitcoin is the one. If you want safety and security today, then you probably opt for a digital currency provided by your government in one way, shape, or form. Unfortunately, that's the way it is. This is not a revolution. This is going to be an evolution.
Could it be argued, though, Iqbal, with Bitcoin, there's still a very small amount of holders who are holding onto a huge amount of Bitcoin and can move the market incredibly, and have done, as we've seen over the last 6 months, year, 10 years even, and why we've never seen an authorized ETF in the US, because of the control that certain holders will have. For Bitcoin to be successful, surely the number of holders who actually take hold of this needs to be more decentralized, and these kind of whale games need to stop. I mean, how would you see that coming about?
I think that's a function of time. And again, I will refer to the underlying asset, the Satoshi, not the Bitcoin. So it's important that people realize you don't need to go out and buy one Bitcoin. Go out and buy 1,000 Satoshis or a millibit or whatever. That's where the decentralization aspect here comes. But ultimately, all our currencies are owned by the governments in one way, shape, or form. So on one hand, I would agree that the whales and what they're doing is not ideal. On the other hand, there is nothing stopping anybody from going out there and accumulating Bitcoin today rather than waiting for tomorrow. There's enough out there being mined, and there's enough available for people to purchase them. I would not, if I was a whale, I wouldn't be selling or spending today. I mean, why would I? It doesn't make sense. But this is going to happen with any asset class. A lot of you have a look at a lot of Facebook stock. They are owned by a majority of people. You have a look at the wine investing, owned by a majority of people. If you have a look at art, the most valuable art in the world is probably owned by some very large families in the world. It's just the very nature of it. So if we want to decentralize it, now's the time to go out and buy a Satoshi. Now is the time to go and actually buy 1,000 Satoshis or 10,000 Satoshis. So the way to solve this problem is go out and purchase them. And again, whatever price value you would like to do, if you believe in it, then you have to, participate in it.
So do you think, you mentioned there's sort of 5 working cryptocurrencies, and if you look on CoinMarketCap, there's currently 5,500 cryptocurrencies. Do you think one needs to effectively get rid of those and get rid of the volatility and get rid of a lot of the more scammy ones for crypto to be taken seriously? Or are Bitcoin and maybe the key ones strong enough to separate from that image and from that association?
Well, again, this image has been created by the media, and I would say the media really need to educate themselves. So there are scams in every industry. I mean, the amount of small businesses which start up and are probably fraudulent in the UK is probably a significant number. So I don't think scams or anything like that should take us away from the technology that has been built and what we're really trying to do here. Again, there's an understanding that there aren't 5,000 cryptocurrencies. There are different verticals. Some are merely ways of or mechanisms of investing in new type of businesses. So investing in social networks, investing in casinos, investing in something like say an Ethereum, a supercomputer. The tokens are merely mechanisms to invest. Remember, stock market is only a few hundred years old. You know, what was it? The East India Company who released their shares were the first company to issue shares in their company. So tokens are just a different mechanism. They're not going to get it right today. They might get it right tomorrow in the future. But don't view all of these as currencies as you're going to spend in the high street. You're not. They're a currency. There are computing engines. There are storage devices. There are bandwidth. There is, as I said, social networks. There's lots of different verticals as you have in stock market today. Unfortunately, nobody's actually done a project out there where they've classified all the tokens based on different use cases and different verticals. So an exercise worth doing.
No, perfect. Cool. Thank you. Ryan has just messaged that he's given up on his internet connection entirely. So is leaving this all to us.
So there's a few questions which actually popped up here. So I'm happy to go through some of those questions or carry on going through whichever way you'd like me to do it, Erica.
Yeah, no, sure. Well, we've got a few quick questions and then we'll open that up. Crypto as money. What do you see as being needed for crypto to replace government money or to be
I'm just going to say hi to Stephanie as well, who's also an employee of eToro. I'm wondering why she's not working and she's on this webinar as well. So hi, Steph. Thank you for joining. She heads up the marketing at eToro if anybody wants opinions on how to market crypto. What do we need for it to actually become real money? So let's refer to Bitcoin here, or just the monetary crypto assets rather than the others. I think the easy one is adoption. I mean, that's let's start using it. But I think we need to remove the price volatility, and this is what brings me back to the point that we either need to start with. There's a step in the middle. So we're using traditional fiat today. Then let's look at Bitcoin as step 3, but there's a step in the middle, and that step in the middle could be stable coins. So if you really want to get into the world of cryptocurrency and you want to buy pizza and you want to spend money, buy stable coins. And you'll really start to understand how a wallet works, where you can spend it, where you can't spend it, and you negate the effect of volatility because it's a stable coin. Now, whether that's Tether or USDC, Circle's version of the US dollar, or it's a Japanese stable coin or whatever, that is the first way of starting to use crypto digitally without the volatility aspect. And then once you're used to it, you can start looking at Bitcoin, because Bitcoin gives you a level of independence which a stable coin doesn't really give you, especially if it's a government-backed stable coin. So I would suggest to anybody, if you want to start using cryptocurrency, instead of spending the dollar or the pound, find a digital version of it, purchase that, understand how wallets work, and see where you can spend it. I mean, there's companies such as Paxful, which allow you to buy gift cards, 300 different types of gift cards you can buy using crypto, right? Why not do that? Start spending it. So it's all about the usability, and it's all about individuals such on this call driving that usability. I think the second trigger point is actually going to be, I'm thinking about these protests which we've seen over the past week, 2 weeks, and 2-3 months. I think what individuals don't understand, that the most powerful vote or the most powerful way they have changing government's opinions is with the pound in their pocket. If every single person who protested over the past 2.5 weeks was to ditch the fiat currency and replace it with a digital currency, every single government would listen without fail. And I think that's what individuals don't understand. They now have the option of getting people to listen to them just by changing the money in their pocket. They don't have to do anything else, but it's going to require a collective individuals to actually do that. And I'm not saying you should do that. I'm just saying that something like this will trigger the adoption when it comes to crypto assets.
So Ryan has just texted a question due to his bad internet in Canada. Doesn't money work quite well, such as instant transfers and no fees now for some of us, and instant touch payments? Why change, and what makes crypto more secure or more user friendly? If you could go into that.
I'm not sure if crypto is user friendly right now. So it's so far away from being user friendly. But this happens in any innovation curve.
Okay.
The first versions are very, I would say, command line driven for all those who like Unix and Linux type setups, and then the user layer occurs. So usability, user friendliness, we're not there. Sorry, Erica, I missed the first part. You broke up slightly.
And it just that doesn't money work quite well anyhow? Why change? I guess I would interject my own statement. It works quite well in central London if you're one of the privileged few, having spent years of my life living in South America and traveling extensively. One could argue that crypto is a lot cheaper and more user friendly than paying some of the local remittance companies there.
Yeah, so no, money does work. If money hadn't been working for all these centuries, we wouldn't be where we are today. But money itself has evolved. And again, I don't think this is a black and white. This is an evolution. And so today we're straddling both camps. We have one leg in traditional and we have one leg in crypto. 10 years from now, it will evolve all to crypto. It's just the same as challenger banks. Today, I have an account with NatWest, I have an account with Monzo. 10 years from now, will everybody be in challenger banks? Maybe, but everybody will be online. So again, it's just stepping stones. Is it better than traditional money? If you want a level of independence, 100%. If you want to send money abroad really fast and cheap, try sending $5 to Australia today. You can't. Well, you can, but it will cost. Try sending $5 worth of Bitcoin, costs are negligible. But again, is there a clear use case? Is there a clear benefit? I'm going to say today it's not. Today there's not, which is not an issue. There was no clear use case for something like Facebook or a Twitter. If somebody come to me and said, hey, I've got this fantastic idea, I need $20 million so you can post 140 characters and communicate, I'd be like, you're mad, right? But people now absolutely love Twitter, especially in countries which have repressive or oppressive regimes. They love it for disseminating news. So there's nothing, and I think that's where Bitcoin and digital currencies come into it. They give you the freedom. And I think that's really, really important. If you look back at the internet was all about freedom of communication, using the channels that you want, right? Everybody could become a content producer, a video producer. Everybody could become a publisher. That's what crypto assets allow you to do. Everybody can become their own bank and have their own independence and freedom, should they choose to. Today, no. Today, we all want banks as intermediaries, which is fine. Tomorrow, we'll be fine. I'll be happy to send Bitcoin to you, Erica.
That's very kind. I'll gratefully accept that.
Yeah, send it back.
So I know you've been very busy at eToro lately with more and more people trading crypto, especially since lockdown. What inspires that? What leads more people to get into the trading side? What brings more new users to crypto? And second question from that, you promised you would give us the hotmail of crypto, the biggest use case. What do you actually see as the biggest use cases?
Okay, so so what gets people in trade? The other thing is, Erica, on the chat, most people are posting questions on the chat and not on the Q&A.
Yeah, no, I'm watching. Yeah, on it. We'll get onto those.
What encourages more people into trading? Great marketing. And my head of marketing's on this chat, so I have to give credit where it's due. And also, head of Asian PR is on this chat as well, so I have to give credit to that. No, look, trading has become really easy, and I think individuals are really passionate about crypto. So I've never been to a barbecue where somebody has told me, I've just purchased this ETF from Vanguard. Never. But I have been to a barbecue where people say, I either have Bitcoin or I don't have Bitcoin. So it's actually encouraged a whole host of people, entire generation, of getting into investing. And I think that's a positive. So eToro, we've had 10% of our people who purchase crypto move into stocks and shares. They would never have entered the world of investing. So I think, why are people doing it? There is a lot of hype. The returns, 2 years ago were ridiculous, and people are still going for those returns because ultimately that's what you want out of an investment. But I think people are also curious about the technology, and people are having regular conversations about this asset class and its potential. So I think that there's a number of different reasons why people invest in this. Primary one being obviously returns. They all want to become millionaires.
Cool, no, thank you. And what you said would be the hotmail of crypto, the biggest use case is the one thing, the one use case that would spark.
So this is the second half of the answer to Ryan in what I believe needs to happen before crypto becomes mainstream. And again, I have to use the internet as a parallel. I wrote a blog post about this, and I can't remember the URL. It's on Medium somewhere.
If you email it to me, I'll share
but
it.
the first layer of the internet was similar to blockchain. So if you think about the networks that were being built out and that technology was similar to the technology developed when it came to blockchain. Then there was a second layer. And the second layer in the internet was internet service providers who allowed us to connect to the internet. So the second layer, if you look at blockchain, are exchanges, crypto exchanges, where you can buy a token, where you can buy crypto and connect to the blockchain. I send things across the blockchain. Then there's a third layer in the internet industry and in the blockchain industry. And I think that's the enabler. That's the critical one. So I'm going to skip that. I'll come back onto that. The fourth layer was e-commerce, Facebook, social networks, et cetera, et cetera. You know, there's 4, 5, 6 layers there, but I concatenate them into one. Were all the use cases or all the websites that we use today. That's the fourth layer. The internet wasn't built for e-commerce. It was built for communication. When we look at blockchain, the fourth layer is where we'll spend it, where we'll start remitting money, we'll send it to each other, we'll spend it on Amazon. And today, when I speak to a journalist and saying, well, you can't spend it anywhere, I'm like, you're looking at the wrong thing. You don't understand the innovation part, the innovation curve. We need the step 3. We need the enabler. So the enabler for the internet was something really simple. It's an email address. Without an email address, you could not use Amazon today. You cannot sign up to Facebook. Well, you can use a mobile phone number, but you couldn't sign up to Facebook or Twitter or any other website which provided you a service or sold you a product without an email address. So we all needed email addresses. So if we follow that analogy through and ask ourselves, what's the enabler? And this is why I call it, what's the Hotmail for crypto? The enabler for crypto is, again, really simple. It's wallets. Without a wallet, you can't send, receive, spend, do anything regarding crypto. Now, who's going to provide these wallets? Again, we'll go back to the internet as an example. The first generation of email addresses were provided by your internet service provider, AOL.com, Demon Internet in the UK, et cetera, et cetera. So the first generation of wallets in blockchain were provided by the exchanges, Coinbase wallet, Kraken's wallet, et cetera, et cetera. I know there's private wallets from blockchain.com, et cetera, but the majority is still being provided by the exchanges. However, the second generation of email addresses were private companies such as Hotmail and Gmail. So what we really need to look out for is the second generation of wallet providers. Imagine this. Imagine you're the largest wallet provider in the world. It's just software, so you don't really need that much regulation. And the majority of crypto transactions went through your wallet business. You, by default, will become the largest bank in the world without a banking license. So we need to find the company. So if I was a journalist, if I was doing research on this, I'd be looking at the startups, I'd be looking at the entrepreneurs who are building wallet businesses. Companies like Reserve.com, companies like Cash App, companies like Paxful, the guys out there who are really pushing the wallet apps. If you own the customer, if the customer owns your wallet, by default, you will become a really, really big financial institution. So that for me is the turning point. If we can get everybody to download and install a wallet and just show them how to transfer, I don't know, an XRP token for one of, since they're so cheap these days, that to me is the turning point in the world of crypto.
Oh, thank you. So we've got
I love XRP in case anyone's wondering.
You're adding to the controversy, mate. So we've got a number of questions here. So Pramod Joshi is asking if regulation is the key, and if so, does that not run contrary to the ethos of blockchain?
Oh wow, which hat do you want me to wear? If I'm wearing my hat as the MD of eToro, I love regulation. We should be going. If I'm wearing my anarchist hat, I probably use another word for regulation. So no, again, look, as I said, there's a couple of turning points in crypto. You need to enable the wallets. There'll be a society shift where individuals will realize that they can vote by just changing currency. They don't have to do anything else. But there are kind of underpinning that 3 or 4 layers. The first were, I would say, structured products such as ETFs, so we can get institutions involved. We need custody, again, to get institutions involved in the world of cryptos if we're talking about an asset class. We do need regulation. And again, regulation provides credibility, and it gives us a sense of peace. I can't think of a better word, but the majority of individuals aren't going to take a leap of faith into crypto unless they feel comfortable and confident. If regulation ticks that box, I'm all for it. I have no issue with it whatsoever, right? If regulation means that eToro can sell Bitcoin, right, and that means a tenfold increase in the amount of customers purchasing Bitcoin, I'm great, not only from a business perspective, but also that I know that 10x more people now own Bitcoin. So I don't have an issue in regulation of crypto. Where I do have an issue is if it hinders the adoption of crypto. From an FCA perspective, I can say that their regulation is not going to hinder the uptake of crypto in any way, shape, or form. They haven't, the buying and selling of crypto or Bitcoin, they're not limiting. They're only saying from an AML perspective, we just need to check if somebody's buying $100,000 of it, where the money came from. I don't see that as being necessarily being an issue. I haven't seen customers run away because they have to upload a passport photo or prove what the source of funds are. So no, I don't really have an issue. You can still do the anarchist bit, because once you own Bitcoin, you can make it anonymous if you'd like to, and you can use it without an intermediary. You don't need a bank in the middle. So this is, I would say, it's the best of both worlds right now. So yeah, I don't think it'll hinder it.
So Ryan has text through, when does a wallet need to become regulated, a regulated custody provider or a bank? And for example, if you've got a wallet and you store a Bitcoin in it, and then in a few years' time that becomes worth more and it gets hacked, who's liable?
Well, that's a can of worms, Ryan. Thank you. Thank you very much for that question. So that's
He's deliberately muted and hidden himself in Canada before asking that.
It's a difficult one to answer in 2 minutes. So look, if you have your own wallet, the custody side of it doesn't necessarily come into play in terms of, you have to be regulated, et cetera, et cetera. That's your own wallet. That's your own, and most of the wallets aren't even traceable, especially hardware wallets. In terms of who's liable, look, if you have your own crypto in your own wallet, right, and I'm differentiating by your own wallet versus a company provided wallet. If you have your own crypto in your own wallet, think of it like cash. If you lose cash, you can't hold anybody liable except for yourself, right? It is what it is. Now, if you have crypto held with a custody provider, these wallet providers, then technically, and I'm not going to say legally, technically the onus should be on them to insure and cover your assets just as a bank would be. And this is what I'm saying when I said we need custody solutions. So I would like to be a software provider who provides you a software wallet, but if the crypto held in that, I would like it to sit in custody with the likes of Nomura or the likes of Fidelity, who will then insure that crypto for me. Then I can provide you a really good service. But I think we're probably 6 to 9 months away from being able to provide that. So it's when I say we, I'm not saying eToro, I'm saying the industry. So the onus would be, Ryan, to answer your question, the onus should be on the software provider eventually. It isn't today because they can't provide that level of guarantee, simply because, not because the hardware and tech's not secure, there's no one covering the insurance, or there's very few people covering the insurance on these products. And that's the difficulty, whereas your money in the bank is insured. It's very easy to insure. So again, it's a journey. But again, it shouldn't be a reason for us not to be buying, using, and adopting crypto.
I mean, to do a shout out in here, we've got Julian in here. I think Julian, I saw his name. Yeah, Julian's here from Gemini. So they're an exchange and crypto store with insurance solutions. Just
I love Gemini.
So hi Julian, if you're listening. So Michael, excuse my pronunciation of this name, Benedikinski, is asking what your view is on leverage of crypto, i.e., for example, if we're looking for regulation and consumer protection in this space, should we be restricting the large leverage on crypto, or do we see that crypto is largely about speculation, and should we be allowing leverage trading of crypto?
Oh, that's a good question. So I'm going to take my CEO hat off for the answer in this question. So I don't think leverage restrictions prevent or safeguard consumers whatsoever. Why? If you want to buy crypto on leverage, it's really easy to do. onboard yourself to an offshore platform and go and buy 500-to-1 leverage on crypto. So it doesn't protect consumers whatsoever. What it does is protect companies and protects the regulator from the consumer complaining to them, right? Does that answer the question? I can't remember what else there was.
It was, if you've got, I mean, should leveraged crypto trading be restricted if we want to have regulation and consumer protection, or do you think if people want to trade riskily, they'll do so anyhow? So that's their loss.
Anyhow, and the reason why leverage was largely restricted was more to do with things like cash flow in the early days of crypto. So, for instance, if somebody buys 5-to-1 leverage crypto at, I don't know, company ABC, they would either need to buy 5-to-1 crypto elsewhere, or they need to buy 5 cryptos. They used to traditionally go out and buy 5 cryptos, which is very costly to them, right? The reason for was this: there weren't many institutional players who offered you futures leveraged. Now there are. So that risk has largely diminished for companies. So I don't see any reason for having leverage restrictions on any products, not just crypto. Crypto is no less or more volatile. Look at the Dow Jones. It's moving 2-3% a day. Bitcoin's not doing that these days. So I don't understand why we have leverage on stocks and not on crypto.
Cool. No, thank you. Someone is asking what your thoughts are on cryptos that are created by businesses like Orbit Network, or suggesting NYE or RKT. I'm afraid I don't know any of those, but thoughts on cryptos created by businesses.
Look, they're a tool. If they want to use that tool for their business in terms of recording transactions on a ledger, I think it's fine. If they're saying that they want that as a currency adopted globally, I think madness. So it entirely depends what they're designing or the use case for that crypto is. So it's very difficult to say it's a good or a bad thing. But if they want to create a currency, no, I would never buy a currency of a company. I might as well use the government's currency. It's the same thing. If it's a use case, for instance, like the JPM coin, and they want to use it for internal transactions and remittance, etc., then it's a tool. That's entirely up to them.
Okay, no thanks. Someone's asking your thoughts about centralized exchanges.
Centralized or DEXs?
Well, both centralized and DEX, actually. Second part of the question.
Well, a lot of this, most exchanges today are centralized. Are they a good or bad thing? They work perfectly fine. So I don't see why people have issues with them. The decentralized part, I understand from an ownership perspective, etc. But I think decentralized exchanges still need, maybe 12 to 18 months to develop fully because of liquidity issues. So they are good, but the majority of people are not going to use decentralized exchanges. I hate to say this. They're going to go to safe havens. They are going to use apps like a Revolut, like an eToro, like a Coinbase, where it's really simple to buy Bitcoin. They don't care about the anonymity. 10% of the population may do, but the other 90% don't. So if you want a decentralized exchange, you have to look at your business model and saying, am I okay with 10% of the population? But most of the people out there they wouldn't even know if it was a decentralized exchange and what it actually meant and what it does for you. So, but on a personal level, may the best man win. It's like VHS and beta.
Okay, so Alistair Loosby is asking about the carbon footprint of cryptocurrencies and how difficult do you think crypto is on that standpoint, and how do we reduce its footprint? So I want to interject that yes, Bitcoin does use a lot of energy. Newer cryptos don't. Do you think that will be a pressure on Bitcoin specifically to change that, or do you think therefore Bitcoin might be replaced by a less environmentally damaging or energy using crypto?
So I'm going to say something which should probably alienate most of the audience. If we were that worried about the carbon footprint, we wouldn't be all booking flights desperately to go away since we come out of lockdown. But no, let me look at the numbers a little bit. So people worry about the carbon footprint of Bitcoin. Lightning Network and Lightning nodes are starting to take a foothold in the world of crypto, especially in Bitcoin. So the Lightning Network will really help us when it comes to mining, because you won't have to mine all those coins. Only the end of day or settlement transactions will be added to the main Bitcoin blockchain. So that will help reduce it. If you look at Ethereum, they're moving to things like proof of stake, so that will also help reduce it. But I think we have to take a step back. And the largest carbon footprint that we have right now, or one of the largest, is the electricity being used by data centers for all the apps and websites we're visiting on the internet. Right? So if you really want to worry about the carbon footprint, I'd delete my Facebook account, switch off WhatsApp, and stop using the internet for superfluous activities like TikTok. Right? The data centers are 20% of global electricity supply will be used by data centers by 2025 or some ridiculous number. Don't quote me on that. Please check it. That's what's using the electricity. It's not Bitcoin mining. So we need to compare, apples to apples. It's a new innovation. It is inefficient right now. The efficiencies are being improved. So it's not something I'm necessarily worried about, at least today.
Cool. Michael is saying he comes from the institutional trading business, and your comments about risk are probably the most relevant ones. Having all crypto wallets in an unregulated software company is madness. What are the built-in protections for investors?
So I would ask him why it's madness just because the company is unregulated. I know a lot of regulated companies who probably don't have proper custody solutions. So that's just been being slightly antagonistic. There are very few protections today. And again, the protections, companies protect individuals' finances by being insured. It's very, very difficult to find insurance today for crypto assets because of the price volatility. There are companies who've started to do this. And again, it's very early days. If 2017 hadn't happened in the world of crypto, we wouldn't be having this conversation today. So maybe 2017 came too soon for Bitcoin and its evolution of technology, insurance products, etc. So the risks are there today, but I would say the risks are minimal. We all heard about exchanges being hacked. We all heard about this, a year, 2 years ago, but we're hearing less and less because the exchanges have had to improve their technology. They've moved a lot of crypto into cold storage, and they are now looking at insurance mechanisms to further protect consumers. Again, I come back to the point. This is an innovation cycle. We're on that curve, and we're actually fortunate to witness the development of this cycle. And very few of us have probably been in a generation where we've actually seen the entire innovation start from a blank sheet of paper all the way to a user-friendly technology. And I think that's a fascinating place to be.
Cool. No. So a quick question. Someone's asking, have you noticed more users signing up before or after the Bitcoin halving?
Before.
Okay. Matthew Nyman is asking, so Matthew works over at the new crypto bank Ziglu. Regarding regulation, are you concerned about the FSMA perimeter that will expand to include crypto, and FCA will then restrict retail access about the CFD ban and FCA statements about unsuitability for retail? You might want to make that question slightly easier to digest for me and everyone else there.
I'm trying to find the question.
Do you want me to WhatsApp it to you? If you go into Zoom, into Zoom, it's 1, 2, 3, 4, 5, 6, 7 up by Matthew Nyman.
Okay, that'll take me ages to find. Yeah, just WhatsApp. If you can cut paste, just
right.
WhatsApp.
Yep.
But I think it was related to derivatives banning.
I'll WhatsApp that to you and get onto the other questions whilst we're doing that. Mike Walsh is asking, is the greatest risk to crypto from compliance and government regulation?
It depends which government you're talking about and which regulation you're talking about. I'm going to say no, and my hypothesis on this is based on what I see the regulator in the UK doing. They have been, I would say, quite supportive of the industry. They work very closely with the industry. And today, if you want to engage with the regulator and have an opinion, whether you're an ATM operator, a wallet provider, or whatever, it's very easy to contact them and try to understand where they're coming from. They're not regulating Bitcoin. They're doing it from an AML perspective, but they're not preventing everybody from selling or buying Bitcoin. All they've asked is companies register with them, and the registration process is not onerous at all. It's very simple. Sure, if look at Germany's regulation, BaFin, they're saying that banks can sell Bitcoin. Again, very positive. The only thing they have said is that if you're going to offer custody to German clients, that the company needs to be registered in Germany. Fair enough. It's not too difficult to register in Germany. They've also announced, what was it today, that the German exchange or something is listed in one of the Bitcoin derivatives or whatever. So again, they are being progressive. I don't think they've been restrictive. I think if there was a regulator who had a draconian measurement and said, well, no Bitcoin to be used here, you can't sell it or anything like that, yeah, fair enough. Very prohibitive. But will it stop customers from purchasing and utilizing Bitcoin? Absolutely not. And this is the freedom that this gives you. And this is what I think countries and governments are really concerned about, that they don't know which button to press to actually stop it. And that can't be a bad thing.
Cool, thank you. Leon is asking what your view is on the Chinese CBDC, so the DCP, the Digital Currency Electronic Payment Program. or the crypto yuan. Will that replace the US dollar, or will it replace Libra? What do you think? I've added the Libra question.
That's a question on economic theory. So I think most currencies and most empires last around 100 years. So who knows what will happen to America? I don't want to take a call on that. But I think what China could do, because they are quite progressive, ultimately they want to replace the US dollar. We all know that the dollar standard, China wants to replace that. So in fact, any country, if they could replace it, they'd be happy to replace it, because it makes their currency more valuable. So I think if China are smart, I think the digital version would be amazing for them to do, not only for the industry, but I think for the Chinese currency. So I'm looking at it from two perspectives. So I don't see a downside in them having a digital currency. One, it will educate and introduce digital currency to the Chinese population. And secondly, Chinese population will then start asking the question, oh, okay, if I can use the Chinese currency, why can't I then use Bitcoin? It gets people to start using these things, and it gives them the freedom. So I think anybody doing this is a really good thing. Even Libra. I mean, I don't agree that Libra should have their own currency. They should just be introducing wallets to everybody, which comes back to the point that I made, 10 minutes earlier. But yeah, I think it's a plus. I think any country coming out with their digital dollar, digital pound, whatever, is a good thing. It gives people the first stepping stone into the world of digital currencies. And once they're there, then you can't stop them from buying other currencies and exchanging it. And Bitcoin and other currencies are sitting there to be explored.
Cool. Peter Davey is asking, won't CBDCs and stable coins kill Bitcoin in the money space?
Very interesting question. So yes, there's a high, because it's the volatility. It's the volatility play. So today, if I was going to use digital money, I'd probably buy Tether, simply because it's stable. Mm-hmm. If I wanted to spend it, if I wanted to get paid in a salary, I would say pay me in Tether. And then I may go and purchase Bitcoin or some other asset class. So I think they do present a risk, but I think there's a better use case for stable coins, and I refer to it as a ETF 2.0. We don't need to wait for the SEC to approve an ETF on Bitcoin. What we need to do is create a stable coin which is backed by, I don't know, the FTSE 100 companies. And there's you have your ETF 2.0. Mm-hmm. And that's where I think stable coins should be heading, as wrappers to investment or portfolios, which you can purchase as easy as we can, ETF.
Oh, no. So someone is asking that some countries have banned Bitcoin and other cryptocurrencies, such as China and Russia. And could Bitcoin be banned? Is there a risk that Bitcoin could be banned in the UK and other parts of Europe? And is it already too late to stop adoption?
It will not be banned in the UK. At least there's no conversation, as far as I know, about it being banned in the UK. They will not call it money, because when they call it money, they'll have to start accepting it as money, which is difficult for the Bank of England to do. Is there a risk? It entirely depends on the people on this call. If the individuals on this call, encourage others to not just invest, it's not all about buying, it's about utilizing it, it's about downloading, installing wallets, then no, I don't see any risk. Remember, Bitcoin's brand name has been promoted globally without a single spend by Satoshi on marketing, and he's done it faster than any other brand out there. So is there a risk? No. Institutions are now starting to invest in Bitcoin. Family offices are starting to diversify their portfolios with 10% Bitcoin. It's the best returning asset class, I believe, of 2020. No, I don't see it as a risk, irrespective of what JP Morgan and Goldman's say.
Didcha is asking, what role do you see central banks playing in the evolution of crypto in the next year?
Digital versions of the local currencies, of local fiat. They need to bring them out. They will bring them out. They're not going to promote Bitcoin. We all know that. But there's no issue of them promoting a digital dollar or a digital pound. And again, it's a stepping stone. Mm-hmm. Once that stepping stone has been established and people start to get used to wallets and accessing the digital pound, then it's a very small step to move to a completely independent currency.
Someone is asking, as stablecoins are booming, do you think that they will bring stability to crypto assets, and are they the solution?
Again, it depends on which.
I mean, okay, go on the assumption that they mean truly asset-backed, verifiable stable coins, not Tether, for example. So the concept of a truly stable coin. I'm going to add that.
So I'm not necessarily in agreement that a stable coin should be 100% backed by an asset. I mean, it just doesn't work. Even in banking today, the dollar used to be backed by gold. Now it's backed by what, right? So these things have to evolve. I don't think that necessarily brings stability to the market, because stable coins have a different use case. I think stable coins, again, as I mentioned, whether they're an ETF 2.0, or whether someone creates a version of the dollar, or what Facebook wanted to do, a basket of currencies, etc. I think, again, they're just stepping stones into this world of digital assets and digital currencies. I don't think they are the end game, but for now, I think they're a fantastic stepping stone.
Mm-hmm. Someone's asked an interesting philosophical question. Historically, wars have been funded by governments printing money and issuing bonds, and we've seen some signs of printing money recently due to pandemics, not wars. Could adopting Bitcoin as a global reserve currency prevent this action by governments and in turn bring about world peace? Smiley face. But there is an argument to that. If there were a worldwide non-centralized currency, could that have an impact on governments being able to print money? That's my addition to Jay's question.
Yeah, the easy answer is yes. It's a very interesting question. I'd have to give it a lot more thought, but the easy answer is, yes, if you can't print the digital currency, you can't create anymore. But I do believe if you have a look at the source codes of Bitcoin, it does allow you to create more Satoshis per Bitcoin. Not more Bitcoins, but you can have more Satoshis per Bitcoin. But somebody needs to double check on and confirm that. So technically, it might be possible to print more.
Cecilia is asking, what are your thoughts on the April 2020 Libra white paper?
I haven't read April 2020's Libra white paper, so unfortunately.
Okay, on the concept of Libra, let's expand the question.
Okay, the concept of Libra, are we talking about the basket of currencies, or are we talking about the wallet side of things?
Go on the concept of the currencies.
The
wallet is just a tool for them.
Again, when Libra first came out, my position, and it hasn't changed on it, anything which will educate and encourage people into this digital realm, I would welcome. Whether it's Facebook doing it, Amazon doing it, the government's doing it, to me, it matters not. And the reason is, we already have an independent currency called Bitcoin, right? So if the leap of faith for a user from fiat to Bitcoin is too much, and they need a stepping stone in the middle, and that is provided by Facebook or a stable coin or a digital dollar or whatever it is, I'm all for it. Because some people need stepping stones, and then eventually we'll go towards Bitcoin or whichever currency you want to use. So anything which acts as a stepping stone into the world of digital assets, I think is a plus. It's a great for the industry. And since Facebook, showed its cards, governments have had to take it seriously. And journalists have suddenly had to say, well, we can't keep calling it fraudulent. We can't keep calling it a Ponzi scheme. We can't say it's used for buying drugs, etc. They've had to take this thing seriously. So anything which adds to the credibility of the world of crypto, again, I think it's a positive.
There's a few questions about proof of work and proof of stake, where you see Bitcoin heading. Do you have any thoughts about that?
I'd be very surprised if it headed towards a proof of stake. It doesn't need to. Again, I come down to the Lightning layer, the second layer on top of Bitcoin. Bitcoin was never designed for me to record that I've just purchased a coffee from Starbucks and keep it on the blockchain for eternity so everybody else can see. That was not what Bitcoin was designed for. That's what the side chains are designed for. That's what the Lightning Network is designed for. Think of it, I don't know how many people are from the UK, but think of it like an Oyster card. So when I buy a yearly travel card, the main transaction of spending $2,000 is recorded in my bank account. But the day-to-day transactions are only recorded by Oyster. So imagine having a side chain for Starbucks, right? So all the day-to-day transactions are stored on the Starbucks side chain. They don't need mining. They need nothing, right? However, the reconciliation at the end of the day, at the end of the month, when they want to store it on a permanent ledger, Starbucks then updates the Bitcoin blockchain. Or if you're doing a big purchase like a house, you'll do it on the Bitcoin blockchain. So it was never designed for having millions and millions of transactions. It wasn't designed for people to store images on the blockchain. It's the side networks we need to look at, and we need to scale out the Lightning node. So if we want to support Bitcoin, we need to install a Lightning node, and we need to start looking at Lightning wallets, etc. If we're doing the transaction between each other, if we're sending 10 Bitcoin, don't send it over the Bitcoin blockchain, send it on the Lightning side chains. So I don't think it'll ever move to a proof of stake, but Ethereum will, and a few of the others will. They will come with their own issues, whether it's proof of stake or delegated proof of stake. They all have their issues. Also, the majority of people don't know how to stake. So then does it become slightly unfair that somebody's out there has lots of tokens, but they don't know much about the world of staking, etc. So it's complicated, but I don't see Bitcoin moving to proof of stake from proof of work, because I don't think it needs to.
There's a few questions about gold and how Bitcoin is often seen as a store of value or a digital gold. Why do you believe it will evolve past that and beyond the currency? I mean, the obvious one is it's easier to transact digitally and in Bitcoin than physically giving gold to somebody. But if you could expand on that.
Yeah, I mean, so
that question's from Roland, the last one I asked.
Yeah, no. So you can buy digital gold today. Companies such as Commerce Block, where you can buy, I'm not sure what exchanges it's traded on, but you can buy digital gold backed by physical gold today. So you can buy digital gold tokens, so you can use that to move gold around. Again, I think it fundamentally comes down to the individual. En masse, the entire world still do not buy gold for a store of value. I don't. I don't sit there and think I need a store of value, so I'm going to buy gold. Investors may do, funds may do, but you and I on the street don't. Now, if we can change that, and you and I on the street start buying digital gold, or we buy Bitcoin and we believe that to be a store of value once the volatility has been removed, it's not a bad thing. So there are multiple stores of value, and I don't think there's ever been one winner. Gold inherently has been thought of as a store of value because the dollar was backed by gold, but it doesn't mean necessarily it's a store of value today. So I'll come back to, I think this is a journey. There is no right or wrong answer on this. I wouldn't use Bitcoin today as a store of value. Would I use Bitcoin tomorrow as a store of value? Maybe, but I think the price needs to be significantly higher to remove the volatility before I think of it as a store of value.
Calvin is asking, how do you see the challenges under the current situation for crypto exchanges in 2020?
What challenges?
Calvin, if you could expand on any challenges, if you've got any specific questions. I mean, obvious ones would be trust. That, I mean, we're not talking about some of the, Gemini is one example of a better crypto exchange, but for example, looking at crypto exchanges in general, the stat I got given about a week ago, you've got $2.5 million are hacked or lost or stolen from crypto exchanges around the world every day, currently on average.
Probably, but I guess
security is one.
But how many fraudulent transactions or how many cards are actually faked or bank accounts hacked into on a weekly or monthly basis globally? I would say the number's far, far higher. So as long as the individuals have their funds returned to them, once if they can prove it's the exchange's problem, I don't see it as an issue. Secondly, I've never come across a customer who's actually had an issue with an exchange or buying crypto or saying that I don't want it from a trust perspective. Never seen.
It's fair to say there's crypto exchanges and crypto exchanges.
Of course, that's like with anything. Would I, 2 years ago, would I have trusted Monzo? No. Today, do I trust them? Yeah. So it's, it's similar in any industry. So.
Peter Davey is asking, you're talking about the money use case of crypto, and that's primarily what this conversation has been about. Have you got any thoughts about smart contract and data?
No. I wish I could give you a detailed answer. I'm not really well involved in the world of smart contract. I think, again, that's the technical layer. From a user ability perspective, they don't care about smart contracts. It will just allow us to do business quicker and transact faster. And again, we're moving slightly away from Bitcoin and crypto to the realms of blockchain. Ultimately, what does the blockchain allow you to do? Triple entry accounting. So if you look at the world of business, 100 years ago, we had single entry accounting. If I ever did business with, say, you, Erica, I would like to have met you, and I would have put an entry into my ledger. Then double entry accounting occurred where we could transact further afield. I could do business with individuals, say in China, they recorded it in their ledger, I recorded it in mine, we shook hands, we did business, etc. What the blockchain allows you to do is triple entry accounting, whereby the trust relationship established between two individuals is done using contracts and technology. So I can now do transactions with anyone in the world, knowing that my money will arrive and they know their product will arrive. We don't need an Amazon in the middle.
Cool.
So
No.
enable business.
No, perfect. Thank you. We've got Nicole has got a hand up, so I'll allow Nicole to talk and see. Nicole, if you could ask your question, please. I've got to unmute Nicole.
And Nazareth also has their hand up. There's two people. Yep. They're very polite.
It's very polite. Doesn't seem to be allowing me to unmute Nicole. So in the meantime, somebody is saying that they live in Dubai. What is the best way to attract investors and people to digital currency, into crypto?
In Dubai?
Or well, in Dubai, but let's make that a general question. I don't seem to be able to unmute the people with their hands up, so I have a feeling it might be down to them.
Just chat to them individually, and then I'll answer that question you WhatsApp to me. So the best way of attracting customers into the space, I should actually put on my head of marketing. She's on this chat, and I should get her to answer, but she'll kill me for embarrassing her. Look, it's education. It's two parts. Look, there's two types of customers, and the first part who just want returns, right? So the only thing you can show them is the historic returns. You can compare them to the S&P 500. You can look at the FTSE 100 as an asset class and say, look, this is what it's done over the past 2-3 years, right? Caveat emptor, past performance, yada, 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 is not a future predictor, just in case someone from the FCA is on this channel. The second way is to really educate them about the long-term value. So if somebody said to me today, right, Iqbal, the Russian currency is going to be the currency that we're going to be using in the world. And today, for $1, you can buy 100 of them. But 10 years down the line, for $1, you're going to buy only 10. I would think, well, if I'm going to need the Russian currency for traveling and this, that, the other, or whatever, might as well purchase it today. So it's a process of education. And I think we need to educate the journalists. We need to educate the politicians on what this is all about. And it's actually a very simple thing to do. But for some reason, the journalists, and I apologize if there's any media on this, on this, listening to this, they just go with the headlines of that it's illegal and it's this, it's that, it's complicated, it's not scalable, etc. We need to start the education process. We need to remove all of that stuff about a Ponzi scheme. We need to remove all of that stuff about fraudulent and exchanges being hacked, etc., etc. This happens in any new industry. You look at the railroads, you look at the internet, you look at video, you look at any industry or any innovation. At the start, everybody is crossing the red tape because they don't know where the red tape is. Slowly, we start to form structure around our businesses and we start to become regulated. That's all. And as I said, we are the first generation who've been party, and we have the privilege of seeing new innovation from a blank sheet of paper all the way to fruition. So I'm the kind of person who would embrace that rather than actually sit on the outside and, and criticize it. What was that? There's a poem somewhere where it's saying it's easy to be a critic rather than be in the ring. Erica, I've got your message on WhatsApp. On regulation, you understand that FSM perimeter will expand to include crypto and FCA with a retail access. So I believe you mean ESMA's perimeter, not FSMA, but I'm assuming it says ESMA's perimeter will expand to include crypto. So yeah, look, the regulator is looking at banning derivatives on crypto. There's a big discussion happening why they shouldn't. I think the risks are being alleviated. The volatility is far less than, if you look at the Sharpe ratio on something like Bitcoin compared to some of the FANG stocks, I would say it's in a better place. So I think the risks have been alleviated over the past 2 or 3 years. So they haven't made a decision, but I think it'll be a tough decision for them to take. Having said that, if they did ban derivatives, go and buy the underlying asset. So like on eToro, you can buy the CFD, or you can buy the underlying asset. So if you want to earn crypto, you can still buy the underlying asset. Should you want to trade 1 to 100 on Bitcoin, there's enough people registered in the Marshall Islands and Caymans and this, that, the other, who where you can go and trade. So it's not going to stop you from doing it. I mean, they have reduced leverage 1 to 2 leverage right now on derivatives on crypto. ESMA, that was ESMA guidelines a year or so ago. But we haven't seen it impact business in any way, shape, or form. So hopefully that answers.
Nazareth has asked this question: do you think Bitcoin will be replaced by another cryptocurrency and deferring its first position, as it's slower, less usable, and just a store of value? So, I mean, just to add a point, I heard somewhere, read somewhere, that because Bitcoin has a first mover advantage, just looking at what it takes to get adoption, you'd have to have something be about 1,000 times better. Or, you know, that's hyperbole, but it would have to be a lot better than Bitcoin to be able to unseat the first mover advantage. Or do you have any other thoughts on that?
Yeah, there's a couple of points here. From a first mover advantage, first mover in the internet never really wins. We've seen that time and time again. Right? You know, Gmail wasn't the biggest email thing. Hotmail came first. The internet service providers 20 years ago, none of them exist today. So first mover advantage in the world of the internet doesn't help, because every 5 years you just improve the user interface. So the technology itself may improve slightly, but it's the user interface which works really well. So it's not about Bitcoin, it's what user interface is actually going to win. You know, is it going to be the exchange user interface? Is it going to be a wallet interface? Is it going to be Revolut's purchasing mechanism, etc.? So first mover advantage usually doesn't work, but in Bitcoin's case, I think it is different. If you ask anybody to mention the word crypto, Bitcoin is synonymous with the word crypto. Any institution which is going to invest family office money or large clients' money into crypto, they start with Bitcoin. They do not go to Ethereum, they don't go to XRP, and they don't go to all the other mirrored coins. So I think Bitcoin has really, really established itself well. And not only that, because there are 2 Bitcoins. There is the Bitcoin currency, the money, but there is also the Bitcoin blockchain. The Bitcoin blockchain, it's huge. It's the most decentralized blockchain that there is. Hence, it's the most secure blockchain that there is. So if you want to build applications, if you want to peg any currency to to a blockchain or use the security, you're going to use the Bitcoin blockchain. And there's lots of companies who are doing that today. Rather than they're building side chains, which are simply pegged to the Bitcoin blockchain, because the Bitcoin blockchain provides an amazing amount of security. Again, compare this to the internet. 20 years ago, we all had our intranets, we had our office, small networks, etc., etc. Eventually, we all connected to the larger internet out there, because it just gave us the best security and enabled the easiest communications. So I know the blockchain and the internet aren't, you know, directly correlated, but it's an easy way of understanding it.
Okay, no, thank you. Someone, Sepide, is asking if you can recommend any good books, podcasts, YouTube channels, websites to educate ourselves on crypto. So yes, everybody should subscribe to the Crypto Carrier, the weekly newsletter that we let out every Friday on all the latest use cases and adoptions of crypto and blockchain. So I'll send you the link willingly to that, but that's more about use cases and adoption rather than crypto and the trading side. Do you have any resources you'd recommend, mate?
A guy called Jameson Lott. Google his name. He has the best website of every crypto link, every beginner's guide, every video, anything you ever want to learn about the world of crypto. Lott, L-O-P-P, and Jameson.
I'll send the link out.
You'll find the website, read and inwardly digest that. But I would warn you that Bitcoin is like a rabbit hole. And you could spend a long, long time down that rabbit hole. But it's a fun place to be.
The best book I'd recommend is the Andreas Antonopoulos. It's probably awful pronunciation of the Volume of Money. The first edition is fantastic about use cases of Bitcoin.
Okay, I'm just looking at other questions here. Luxury goods. There's a couple of questions from Peter Davey on FATF. What thoughts do you have on how to practically comply with FATF? And there's a couple of others. So, Peter, I'm happy to have that discussion offline, and the simple reason being because I don't know ISO 20022 for payment service providers, but I'm happy to discuss FATF and the vast rules and et cetera, kind of offline. I just don't have enough knowledge of that right now off the top of my head.
You're offering to do a load of research. I'm grateful. Merlin's asking if you've ever thought about launching a utility token for eToro.
No. No, we thought about it during the hype of crypto, but there's no utility that we want. So Peter again had mentioned offshore leverage products are legal in the UK. It depends under which jurisdiction and how you structure your business. But again, I won't go into the details of that.
So Jay is asking a point about savings in the UK is quite bad, and a lot of people are living off credit cards, and obviously with the economy going the way it's going, it's not going to get any better. Whether you think with the HODL mantra, people sort of holding on to crypto, that people might end the dependence of living off credit. So I guess I would add to that point, do I think hodling crypto is safe when one has credit card debt? Probably not. But there is the argument one can get into debt with fiat, and whereas with crypto one has a much greater knowledge of exactly what is in one's account and can't spend any more than that.
So I can answer that quite simply. There is a report coming out, and Katie, again, who's on this call, will kill me for saying this. There is a report coming out which will highlight the increase in savings that everybody has done during this period of lockdown. And so we're actually saving far, far more money than we were. So I think it's hard to correlate between crypto and hodling, encouraging us to save, etc. I think there's too many nuances in the world of saving and earning to actually say that crypto is going to help from the world of saving and investing. Because if that was true, we should all be buying stocks and ISAs and pensions, because they're long-term investing and they'll help us save money in one way, shape, or form. So I think I wouldn't say it's a straightforward answer on that one.
Cool. And I think last question we'll go to, and then we'll let you go. Unless if anyone does have any other last questions, please do drop them in the chat or in the Q&A.
So Peter Davey has actually put a lot of questions in chat. So just scroll through them if you can. But yeah,
yep, they're in the chat. Okay, I might have missed them there. We'll check that. Clint is asking if one wants to start accepting crypto, how best to go about doing that, to structure a wallet to accept crypto.
Depends
as a currency.
Yeah, it depends on, are we talking an e-commerce platform? If it's an e-commerce platform, you can, and you're using something like Magento or Shopify, they have plugins to help you accept crypto. There is the world of gift cards. So there's numerous websites out there. Unfortunately, the names escape me, where you can accept various gift cards in return for crypto and vice versa. There is BitPay. You can add BitPay to your platform, which will help you start accepting crypto. So there's quite a few solutions out there if you want to start accepting crypto. I think WordPress might also have a plugin for their e-commerce store for you to allow to accept crypto.
Okay, no, perfect. And Peter Davey does make a valid point that if you do make payments with a credit card, for example, and you make a mistake or you don't receive the product or whatever it is, that you have a chance to get your money back. Yeah. And that doesn't happen in crypto. If you send a transaction, you send that transaction.
So again, the only reason you get your money back because there's somebody sitting in the middle, like a Visa or a MasterCard, or even the bank can actually refund you that. So again, this is how are we going to start using crypto? So you can do direct transfer. I can send Erica crypto direct. If it gets
accepted again,
if it gets lost, it's never going to come back to me. Or I could use an exchange in the middle. So I can use someone like Coinbase in the middle and I say, hey, I want to send money to Erica. They can then manage that transaction for me, right? And so it won't get lost because Coinbase is handling that transaction. So again, I think there's opportunities for businesses to sit in the middle because we won't all have the confidence to do direct transactions. Right? So there are companies who will start to sit in the middle and saying, send the transaction for us. We will guarantee the payment is made and we will guarantee your product gets sent to you. And that's ultimately what Amazon or, should I say, PayPal do for you. They sit in the middle. So great business opportunities for people. Just to sit in the middle, guarantee the transactions or escrow the transactions in either directions and make them easy. So there are also businesses being set up now where you don't need the long address. You can just use the QR code. Or not even a QR code. You can use, Cash App, for instance, from Square. You can actually use your name to send the payment. So there's layers being built on top of the crypto addresses, just as domain names were built on top of IP addresses. there's a layering technologies which are starting to come out to make it easier for people to remember. But you are right. Ultimately, you send it to the wrong address and it hits the blockchain, you are not going to get your money back. But again, experienced user will send it direct. Inexperienced will use somebody in the middle.
We've got one last hand up, Siam. If you can ask or type your question, please. But otherwise, I'm conscious, Ik, that we've taken up a lot of your time. Are you happy for me to share your contact details with anyone who does have further questions or has complicated questions?
Yeah, sure. Share my LinkedIn. I'm happy to kind of connect there or whatever. There's the last question. Do you have any hunches who is Mr. Nakamoto? Yeah, it's 4 people. That's all I'm going to say.
4 people. Can you share who they are?
Nope.
Okay. I'll get you drunk after this. Siam's question was, what technical areas can we get better at, or do we need to get better at in crypto?
I don't think it's technical areas. I really don't think it's user interface. I've been banging this drum since the start of this conversation. It really is the
user experience.
Yeah, it's the user interface, it's the user experience. It's still it's too clunky, which is fine. Send an email 25 years ago is really clunky. But we really need to focus on the UX, and we need to get UX and product designers involved. But don't discuss technology with them. Just say, these are the 10 things I want this thing to do. Make it super, super simple. And let's not worry about the technology too much. There's enough people focused on technology. Enough people.
No, well, thank you very much to everyone who joined us and asked all the questions. Thanks to Ryan, who's in Canada helping out. Iqbal, thank you very much for giving up your afternoon.
Erica, if you can copy all these Q&A questions, if I've got time, I'm happily send them to you in a Word document and upload them as a blog post wherever you want. If
I will work out how to do that if